The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 27th. Well, we'll call it the Wild Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us today. You and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I at just past 1 o'clock in the afternoon on this relatively, we'll call it a flat day as we speak right now. But it'll probably be anything but flat when we come to the end of the trading session. I want you to know I am absolutely grateful for your presence here. But more importantly, I am here to serve you. So feel free, pick up that phone, dial on in. 877-927-6648. Internationally, 727-445-1044. You can reach out by email. I'll do the best I can to take a look at that, steve@tfnn.com. And, of course, inside the Tiger's Den, feel free to post a comment at any point in time, and we can go take a look at whatever equity, currency, commodity, whatever it is that you've got in mind out there. But let's go ahead and get this show kicked off on this wonderful Wednesday, of course. This is the Hotel California. It's sponsored by none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. I mentioned a flat market. We've got the Dow trading up 5 points right now. She's trading at 16,172. S&P trading up 6 points at 1909. NASDAQ Composite is off 20 points. That's trading down to 45.46. Russell is down 2 points, trading at 1015. We've got gold off $3, silver off 8 pennies, light sweet crude up 73 cents, Biogen big to the upside, up 8%, up $22. BlackRock is up $9, 3%. AutoZone up 1%, $8 there. Hawaiian Holdings, I like that. I don't even know what they do, but I sure like Hawaiian Holdings. They're up 13%. That's up $4. To the downside, you've got Priceline off 50 buckaroonies. That's off 4.5%. Apple's off $4.5. That's your drag inside the S&P, inside the NDX 100, inside the NASDAQ Composite. Inside the Dow, you've got Apple being numero uno weight-wise on both the S&P and the NDX 100, number 9 weighting inside of the Dow. So that is the drag. You've got Boeing. That's a drag. That's down 7% or $9 out there. So we've got a bunch to take a look at. But if we're trying to figure out, what the market is doing, it's really came right up to, so we, had the market go ahead and, in essence, sell off. We had Apple really kick that off last night, coming out with their earnings. Market didn't like, the mere fact that just didn't like their numbers. And so if we take a look at where Apple actually traded to so far this morning, you've got 90 million shares. So we've got big volume inside of Apple today. And Apple's pushing down into the swing point from a couple of days ago that had only 72 million shares. It's really trading into the August 24th level out here. And that's got 162 million shares. So looks like, let me see, what we've been trading for 3.5 hours, just out of curiosity. What is the volume pace out here? Give me a moment to get down to that element in the chart. So we've done 90 million shares. We've done 3.5 hours of trading. So, wow, 167 million shares is what it's on pace for, which is the same type of volume as that August 24th level here. So you got a gap down with some volume out here. Maybe Apple's just simply going to camp out around this area for some time to come. And it certainly is open to going down and testing that low. It's pushing into a swing point. It's doing it with volume. Interesting that it hasn't been able to take out this trading session from January 20th. But if it does move below that low, 93.42, you should anticipate that Apple will get all the way down to $92. And where it goes after that, I don't know exactly, but we won't spend any time on it at the moment. So at this stage here, you're still down in Apple right from their close from yesterday, as I mentioned, down about $4 out there. But what's interesting, we've got Janet Yellen. She's coming out. Well, she's not coming out. The Fed minutes are going to be released around 2 o'clock, I believe. And so the market has kind of brought itself back. And really what it did was it brought itself right back to the precipice of coming right back to resistance. Now, here's where the trouble lay inside of the ES Mini out here. And the ES Mini, coming off of the lows from this morning, let me get my crosshair. Early this morning at about 4 o'clock, we saw the ES Mini get down to a price point of 1851. Now, it made a nice 50-point move. Was that? No, that was yesterday. Yeah, that was yesterday. My apology. It was at 2 o'clock this morning when the ES Mini got down to 1879. So we've moved from 1879 right up to this 1909.50 level. That is a very key level of support and or resistance. Right now, it's been resistance. It has been resistance since the evening of January 14th out here. And it's a very important level of resistance. If the market really likes whatever Janet Yellen has to say, whatever the minutes have to say, and we see a close above that, especially if you see a close above that, price comes back, tests it, and rejects it, that is going to tell you that this market is moving higher. It'll move higher today. It'll move higher tomorrow. It'll probably move higher on Monday as well. But right now, what we know is this is resistance. Now, when we take a look at a 30-minute chart out here, this is where there is maybe, what I think that each of us try to do is we're always looking for some type of signal. Is there some type of signals? Is there some type of, can we read through the charts what the market is going to do, how it's going to respond to the Fed minutes out here? Well, one thing that you and I know is price got up to a very strong resistance level. The second thing we know is that if we go take a look at the 30-minute chart out here, we can see that as price was moving up into that resistance line, it was doing it with less relative weakness. Now, ordinarily, that's not a problem per se. However, just as we were coming on the air at 1 o'clock specifically, the candle that formed at that resistance level, a bearish engulfing candle. Now, I don't know if it's going to have some additional follow through to the downside. Right now, it isn't. But if it does have, if we see close below, if we see a close below 1904 and a quarter, that would qualify. You're at 1904 right now. That would qualify as some additional follow through. Not the best, but it would qualify as additional follow through. What does Stevie mean there? What Stevie means is that at least the initial reaction to Janet Yellen, if in fact we see this follow through between now and 1:30, really at 1:31, and we'll come back to it. That would say to me that at least the initial reaction to whatever the Fed is going to release is going to move to the downside. That initial thrust, at least, ought to move to the downside. Now, where's the downside in the ES Mini? I would say 1894. You're at 1904 right now, so that's only about a 10-point move, and that's why this could be a wild Wednesday out here. But the real question, what the bulls need to see, is a close above 1909.50, and what the bears want to see is that level hold as resistance. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now, we took a look at what we think might be the first reaction. We know that the market has moved right up into a resistance level here, so we don't really anticipate a whole lot of action between now and 2 p.m. All the action, Jackson, is going to be during David White's show out there. But if we look for additional clues in the market, so one of the next places I would go to is I would say, okay, what's going on with our liquidity gauges? And two of those liquidity gauges, one is going to be the Euro-Japanese yen. As we take a look at the Euro-Japanese yen, is it tipping its hand to you and I? Well, if it is, here's what we know about the Euro-Japanese yen. First, forget about those market profiles. Let me get rid of those. I don't know that those are accurate on this currency pair. I need to talk to John about that. But here's what you and I know. Number one, the Euro-Japanese yen has made a 100% move of a move. That means that price came all the way back to the swing point from April 14th. It did that. It created a very bullish reversal signal right here on January 7th. Now, price really never did anything. That's called a key reversal session, bullish engulfing, the whole 9 yards out there. And we can see that price never, ever, it tested the low of that key reversal, but never closed below. So what this is a sign of bullishness if we're going to take a look at this currency pair, which is a liquidity gauge for the U.S. stock markets. We see that the Euro-Japanese yen is trading higher out there. That is like that. The message there is there's no headwind for the bulls to go ahead and push the market higher out here. If this was trading on the other side of the 127.63, really would have to be trading right now below the low of January 7th out at 126.78. I would say that the signal there would be, okay, that's going to move lower, likely go ahead and take the market with it. That's not the message that we have. That is numero uno liquidity gauge. Numero dos liquidity gauge, that's going to be the VIX index. Now, if we go take a look at the VIX index, what you and I are going to first look at here is we're going to look at the 50-day exponential moving average. If there was one thing that I could pass on to you that is worth millions, so just so you can send me $1, each of you that are out there, I'll take that. But this one here, you know, if I were going to start you somewhere, one of the places that I would start you is just a simple gauge and understanding as to where is the VIX index in relation to the 50-day exponential moving average. That is the only thing that you really need. That's the most basic, most important element that you need to know. It does not matter what the price of the VIX is. It doesn't matter if it's 50, if it's 40, if it's 10, if it's 15. It matters where is it in relation to the 50-day exponential moving average. Well, right now, it's trading right above it. So we have a little bit of a conflict. Why do I say that? Because let me tell you, when the VIX trades below the 50-day, which, by the way, is priced at 2082 right now, the VIX is sitting at 2196, there's only two things that the market does. It either moves higher or it moves sideways. Now, when it starts to move back up, that's a little bit, that's when you see a change in trend out here. So, what else do we know about the VIX index? So it's above that. So we've got maybe a little bit of a contrasting message out here. But I will tell you, if at the end of the day you see a close below 2082 on the VIX and you're still short the market, God bless you. Not because you just sneezed, but because you're about to lose more money. Now, maybe you've got a position out there from the short side that is some type of longer-term trade. Well, different story. But then you at least know what to anticipate. And what you would anticipate in this case here is you'd have both liquidity gauges. That's assuming the Euro-Japanese yen continues to move higher. If, in fact, the VIX gets below that 50-day, that would say the markets are going to move higher out here. And I would tell you that where the VIX would go ahead and trade down to, if it closed below 2082, is very likely the where would I tell you? I would tell you very likely the $15.96 level out there. So at this stage here, the VIX is set up that says, hey, bad things can still happen. It's above the 50-day. We know the ES Mini has not been able to take out a very important line of resistance. You see, we got kind of a 50-50 shot here, at least as we've taken a look at these gauges. Let's go take a look at what's going on inside. Now, we'll take a look at the 10-minute charts out here. I think it was the 10-minute charts. Give me a moment. Where was that? Is this it here? Yeah. So, no, that wasn't it. There was the 30-minute chart. I think it was the 10. Was the 10? Was the 30? Come on, Rhodes, get your act together out here. Let me just do this. Let me turn off a couple of indicators out here. We're going to take a look at the 10-minute chart because what we have is actually a confirmed A to B equals CD to the upside. We really have two of them. Let's take a look at the first one. The first one is we've got a B point of an A to B equals CD to the upside. We're taking a look at the yesterday's 20. We're taking a look at yesterday at exactly 1:20 in the afternoon. That's going to be our B point. The high inside the ES Mini, 1899.75, and the volume at 1899.75. Number of contracts, 22,484. Let's go ahead and draw a line across that so we can see that as the ES Mini crossed that line of demarcation, the B point of an A to B equals CD, we can see that it was doing it with one, a wide-ranging bar, bullish, two, with volume. This was at 11:30 this morning, 53,000 contracts out there. And prices now just really come back down to test that level. So that's the smaller A to B equals CD. If we take a look at what that is, what price projection that gives to both you and I, that says that its message to us is that price is going to move up into about the 1927 and or 1940 level. 1927, likely the next move. But as I mentioned, that is the shorter term A to B equals CD, because that B point was also crossed. That's a larger A to B equals CD pattern that is out here. And that B point is the one from 6 o'clock in the evening on January 24th. So we're not going to have a ton of volume there. I mean, the 6,000 contracts in after-hours trading, that's not going to be a great benchmark. But it really could be the A to B equals CD to the upside. And that, I believe, gives us a price of, where were those charts? Oh, the 30-minute chart out here. That is going to give us this. That says that, and I'll draw the larger A to B equals CD pattern out here. It was on there, but we'll redraw it. So your A point is going to be that low from January 20th. Your B point, again, this is the one at about 6 o'clock in the evening on the 24th. Your C point down here from yesterday at about 3:30 in the morning. That gives you and I a price projection of about 1951. Now, what you see out here are a lot of lines on my chart. So let's go ahead and kind of clean this up for you so that we can take a look at it. Now, when we take a look at, I'm going to turn off the profiles for a moment, or maybe even longer than a moment. You can see that that the ES Mini was trading, we're looking at the yellow diagonal lines, that the ES Mini was trading inside this descending price channel. You know, very well-defined descending price channel. Price broke out of this descending price channel. Now, when we take a look at, you and I take a look at horizontal trading ranges, it works the same way when we take a look at diagonal trading ranges. So when you see a breakout, one side or the other, what you can do is just add the equidistant, the exact same distance of your price channel, above or below. In this case here, we've put it to the above side. And as we take a look at that, we can see that that price is going to run into resistance here relatively soon. This looks like about the 1914 level. We saw how price broke above this back here at about 1 o'clock in the morning on January 22nd. We saw the price really tried to come down here at about 3 o'clock in the morning yesterday to test that level again. So it qualifies almost really as a test and a rejection out there. And that's the next level of resistance. Hey, guess what? If there's 2 levels out here, there's a third level. And there's your third level. Your third level maybe takes you up into that 1945, 1950, 1970 level. Something along those lines. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 10. S&P is up 4. We're just trying to get a gauge as to, is the market tipping its hand in one direction or the other with regard to how it's going to resolve itself after it hears from the Federal Reserve. We've taken a look at the currency pair of the Euro-Japanese yen. We've taken a look at the VIX index. So we have signals there that are awash. We've taken a look at confirmed A to B equals CD patterns. That's bullish. That says that the market wants higher price. We've taken a look at what did we start? Oh, we've taken a look at the resistance level of 1909.50. That's bearish. So and I like to be able to, when I show up to do this show, which is every day, pretty much every day, I absolutely, and you hear it, I think, when I share with you my thoughts, conviction. I don't really think it does you a whole lot of good for me to be wishy-washy. And if you ever hear me being wishy-washy, call me out on it, because it just doesn't do anybody a whole lot of good. That doesn't mean I'm right. It just means, you got to show up with conviction in life. That's how you start your day, right? Every day you get out of bed. You got to have what? You got to have conviction with regard to what it is that you're going to do out there. At this stage here, I'm helping you to interpret the market. And we're not seeing any conviction here just yet. We're seeing, some really important signals and that can help assist us with the market. Let's go look at another set of signals. Let's go take a look at the advanced decline oscillator. And let's go start here by taking a look at the NASDAQ composite. Now, you've got Apple that is certainly helping to push down the NDX and the composite. But right now, today, the NASDAQ composite, its price oscillator, its advanced decline oscillator is still above zero. Now, it's not like it needs a whole lot of net declining issues to get to the downside at today's close. It would need, if my calculations are correct, and they are, 607 net declining issues. Like the NYSE needs 594 net declining issues. The NDX 100 needs 39. 39 of the 108, I believe, that are in there would need to turn negative to get that price that advanced decline oscillator below the zero line. So right now, the bulls are in control. That is with the DAX, not the DAX, but the NASDAQ composite being off about 20 points. Was it 20? It was 24 points to be exact. Not big, but even when the NASDAQ composite was off further than this, the advanced decline oscillator was above zero. So that could be tipping its hand. And in fact, if we go back to take a look at the three that we follow, the Dow extending its gains above zero. Looks like the Dow on its way to the 0.382 retracement level, about 16,328. New York Stock Exchange is long and strong out here, so the wider swath of the market, that looks bullish. So, so it's not, it does not, now this is an end of day indicator, but we got to take a look at it 133. We got to take a look at the tools that we have out there. Are there any other tools that you can think of? Maybe you know of a tool that we can think of that would assist us with regard to, maybe it's a trend line off of some chart or something along those lines, that would help us to determine what the market is likely to do out here. If there is, type it in, send it by email, give us a call so that we can try to figure this out. At this stage here, it's like it's a coin flip. It's really a coin flip, in my opinion. Now, I have a wager on this. I've got positions. I've got a bunch of positions. They're all in the green nicely, but, that could evaporate at the end of the day. That's why you keep stops in place out there. So let's go take a look at some equities out here and see what they're doing. Let's go take a look at Biogen, BIIB. It's up with 3 million shares, $22 to the upside. Biogen, it's got a nice sign of strength. That certainly is off of a bottom out here. Biogen in the last couple of days has been testing this little swing point out here from October 15th, which had volume out there of about 2.7 million shares. It was being tested with light volume, 2.3, 2.5. 2.1 yesterday, or not yesterday, but the day before, 1.7. Yesterday, 2.1. Again, not having enough volume to bust out Biogen. And today, it's done with that testing. Now it's moving to the upside. Where is this headed to? Well, where Biogen is first going to head to is going to be to that gap. 301.02 is likely its next stop. Let's go take a look at some market profiles, see if they provide you and I with any information out here. And let's go get rid of that 301 level. And it says 299.92. So it looks like Biogen on its way to 291.99. If it gets above 299.92, it'll get all the way back to the, well, I would say at that stage, depending on the volume coming in, if it has volume of, well, that's no big deal. Now, the problem here is that we're looking at when it made its most recent, swing point highs. It was December 29th, 30th, and 31st. So we can't really use that volume to give us an indication. What we can use is let's use the benchmark of September 17th. If Biogen is moving into those swing points in the end of December with more than 2.5 million shares, price is likely headed to about the where is it? About the 338-ish type level. Big gap down, big supply line from July 24th out here. That supply line extends from a low of 299.76, really all the way up to a high of 384.51. So that is on Biogen, but a nice move today. I imagine that they were out with numbers. Let me see. Yeah, they were out with numbers. BlackRock, BLK. Let's go see what BlackRock is doing. It's had volume today of 470,000 shares. It's up 3%. Let's go see what this is trading into, if this has made its way. Now, what BlackRock is doing, it found some real nice support here over the past week or so down at its TAS market profiles. Now, this was moving into a swing point from August 24th, of course, 1.5 million shares there. You did have volume on January 20th. Now, January 20th, this thing moved lower with 1.6 million shares. Yesterday's test on only 1 million shares out there. So it was not able to bust them to the downside. We see we had a new TAS market daily profile with the point of control being closer to the bottom of that box. That told us that buyers were in control. The question is, are they in control enough to take out where the sellers are hiding inside ticker symbol BLK, BlackRock, and that's at a price point of 310.85. And if it can clear 310.85, what we ought to see is a move somewhere into that December 11th area, anywhere from 321 to 341 out there. BLK is the ticker symbol. Let's go take a look at some things moving to the downside. Let's go take a look at Priceline up 50 buckaroonies, down 4%. What is Priceline trading into? I've got a red line out there. That red line must mean something. That is a breakout area. Let's turn off our profiles and go take a look at the volume metrics as it moves into that breakout area. Now, that breakout area was with 1.1 million shares. You've done about 640 today. So the math says to me, Priceline is moving lower with or into a breakout area with some light volume. It's also moving down, and it's trading inside the swing point here from a few days ago, January 20th. That had volume of 1 million shares. So let me see, what does 641 actually equate to? 641 at this time of day, 641,000 says that it's going to do, well, it's going to do about 1 million shares out here, which is similar to the volume on January 20th. So Priceline is likely going to go test 1039.26 before providing you and I with any further information. Right now, we got the Dow. She is flat. It's safe. It's off $1. The S&P, that's up $5. NASDAQ Composite off 26. Russell 2000, basically flat, down $3. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Another piece of information while we were at that break. I'm trying to blow it up on my screen out here. So let's see if I can do this. So there is a piece of information. Of course, what I was also doing is I was over on the Ladbrokes site over in the UK, seeing if they had any odds on whether or not Donald Trump was going to show up at the debate tomorrow. They don't. They've got a bunch of presidential election and vice presidential election odds out there, but they don't have anything on whether or not he's going to show up. Now, what we're taking a look at here on my screen, let me blow it up, makes it a little bit easier for you. Here's a 30-minute chart here for the ES Mini. So what do we know? We know that the ES Mini has run into a resistance line. We know that price was moving higher, doing with less relative strength out there, has given us the confirming signals that it wanted to pull back. Originally, I was suggesting that price would pull back into the 1894 level, but we've got a new market profile that established itself, and the first level of support is really right down here at about 1897. So we ought to see the ES Mini give up a few points, another 3 points, and move down to at least that level to test it. This box that has appeared here does not give us any indication. It's not a bullish box. It's more of a, it's not a bearish box. It is like in the middle out here. But what is bad, potentially, here is that this new market profile has appeared at a lower low than the prior bottom of the box out here. And when I see that take place, that's usually an indication that the market is preparing itself to actually move lower out here. So this says support could be about 1882. Let's take a look at the side of the trade that says we're up at resistance. The market is going to respond. First, I said, hey, looks to me like the market's going to respond negatively. That's going to be the first reaction. Now, we were taking a look at about, what, a 10-point move. Now I'm not sure if it's going to be a 10-point move. But if we go look at the NQ, I'm more curious about the NQ, and it's 30-minute chart out here. So let me turn off a couple of things that are on this page. Let's go try to figure out, let's get rid of the channels. Let's get rid of that. Let's go ahead and expand this out. Let's turn off the daily time frames. In this case here, we're just looking at the white lines out here. And it has not provided us with a new market profile. Now, the reason that I'm so interested in the NQ is that has been the weak link, right? It's been the weak link ever since the open last night, and no new market profile. And that says that we could see price move at least 30 points to the downside inside of the NQ, because its level of support is going to be the lows of this morning, or it's going to be the bottom of that that box that's out there, the TAS box at the 41.57 level. But let me show you, if the market responds that negatively, don't just jump on board just yet, because here's what the NQ could actually be doing. I'll put this chart up on my screen. Let's say we get a real negative reaction, and at this, where the market's going to move lower. That's really what it looks like is going to happen here initially. That says that we talked about those new the market profiles out here on the 30-minute chart in the 41.57 level. But look what happens if we actually exceed the low of this morning, right? If we exceed the low of this morning, we're going to get down to your favorite count in mine, and that is the 7th inning stretch, where someone sings, "Take me out to the gun range. No, take me out to the ballpark, or take me out to the," we got to come up with something there. Take me out to somewhere where we're going to load up on our thrusters to get ready to take a trade. Because when we get to those 7th wave patterns out here, you see the last bottom that came in here? You can see that that is a 7th wave move to the downside, right? That acted as resistance level. Why that works, I don't know. I just know that it is a wave worth paying attention to. It's the easy wave to trade. So we could see a really negative reaction inside the NQ, and that's what we want to watch. I can't tell. Let me just do this here. Let me try to move these indicators to the upside. We've got a price oscillator that's below 0. That's never a bullish sign unless it's rising, and it's not rising. So with regard to our price relative strength divergent, yeah, we did see where it got down to start its base here at 10:30 this morning. So any move below the lows of today's session is going to set up a potential price relative strength divergent pattern. Look at this top out here. This is back at about 6:30 in the evening. That was on January 24th. Notice that that top that formed out here. So even the most bearish side of this case could be that it's nothing more than a buying opportunity. So it is the NQ, even though you and I spent a lot of time taking a look at the ES Mini, it's the NQ that we need to really focus on and pay attention. At this stage of the game, the NQ signal says that it wants to probably move lower initially as well. Okay, so I don't think there's anything more for us to do. So 147 to go. I think we ask our man Steve-O in the control panel to spin the tunes. After all, I think he's a disc jockey on Saturday, so we got to get some of that music rolling here. But let's go. Hey, I know what we should do. Let's go to Hawaii. Let's go see what Hawaiian Holdings is doing out here. That ticker symbol, by the way, is HA. Ha! Hawaii Holdings, gapping up, almost creating a nice little island to the downside. Now, what is Hawaiian Holdings? What do they do? We got to go see what it is that Hawaiian Holdings is, HA. I don't know if it's real estate, or if it is maybe it's just a macadamia nut factory. It's Hawaiian Holdings is Hawaiian Airlines. Well, there you go. So we know what they do out here. Let's go take a look at Hawaiian Airlines. Why did it gap up? Did they come out with numbers out here? Looks like they did. Q4 results. Yeah, I don't see what they are. But let's go see what the stock is doing. So on a daily basis, you've got a wide price spread, accelerated volume, coming into where this thing had recently shown a sign of weakness. But that sign of weakness had 2.2 million shares. Today, you've already done 4.2 million shares. So Hawaiian Airlines headed back up to at least its highs. That high being the trading day from December 7th, likely to get to the 40.13 to 38.81 level out here. If we put this on a weekly chart, weekly time frame out here, when this thing had gapped down on a weekly basis, was with 8.8 million shares. You've already done 6.2, so it's taken out any level of resistance. This looks pretty good. So Hawaiian Airlines, is it's testing? Yeah, it's testing. It's already testing that swing point. Yeah, okay. Hawaiian Airlines on the weekly basis, the swing point that we looked at on the daily basis. Well, for the week is the week that began December 7th. The low is 37.41. We've already hit that. That week of December 7th has 5.8 million shares. You've done 6. 36.2. If Hawaiian Airlines closes inside the 37.41 level come tomorrow, that says that it wants to go at least test $40.13. HA is the ticker symbol out there. To the downside, let's go see what Amazon is doing. AMZ, and that's off, it's off $11, a little less than 2% out here. That is a weekly chart. Let's go back to the daily time frame here for Amazon, see what it's doing. Not much. Amazon really came down to a price level where it broke out, did it with light volume. Let's go see if there's some other forms of support or resistance that we should focus on. Let's put on our market profiles. And as long as it's trading right on the daily, the bottom of the box at the 591.18 level out here. If it can hold that, price probably heads up to about 630, and that is on Amazon, ticker symbol AMZN. Flat market, Dow is off 8. S&P is up 4, NASDAQ Composite down 30, Russell 2000 down 3.5 points, gold's off $4. The miners relatively flat as well. This is Steve Rhodes with TFNN. We'll be back for our last segment. And then we're going to hear from the Federal Reserve and our man David White. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks, in the last 4 minutes here, I've got an email here from Dano in Clearwater, and he says, what are the charts telling you about gold? So specifically, he asked about a position in the GLD. So let's go take a look at both. Let's first take a look at what the gold contract is doing. Gold priced in dollars, priced in euros, broke out yesterday. That is a beautiful thing. That says to me that what the message inside of Goldilocks is that price is headed to its next retracement level. So let's go ahead and turn off our market profiles, see what we see out here. We are above the 0.382 retracement. Says that gold's next move should be to 1136. If price can take out the 1136 level, we ought to see gold move up to the 1160 area. Quite frankly, if it can get to 1160, the 0.786 retracement area, what I would say is going to make 100% move and get to the 1192 level. That's what I see with gold priced in dollars, priced in euros as well. If we go take a look at the GLD, you know what this is going to show us is that the swing point from yesterday that was taken out was done on light volume out here. So that can be a problem. It could be resolved. It could be resolved today by moving higher after the Fed minutes out here. If we take a look at retracement levels inside of it, when I'm referring to the swing point, I'm looking at the trading session from January 7th. January 7th, GLD traded with 11.7 million shares out there, and yesterday moved above it with 8.4 million shares. That's not how you like to see a B point get taken out, unlike what we looked at inside the 10-minute chart inside the ES Mini out here. Nonetheless, that doesn't suggest to me that price is going to falter and fall. Let's actually go back to the gold contract, because I really want to take a look at their market profiles versus the ones that show up on the GLD. I think that these are the more important profiles to look at. Let's go ahead and get rid of our retracement tool out here. You've got the price of gold above the weekly, above the daily market profiles. That's a beautiful thing. That says that there is freedom to run to the upside out here. Doesn't guarantee it, but boy, there's basically no resistance in place for gold to move higher out here. If, on the other hand, it falls back because he's in a trade and he's looking, where to take a stop, the problem is that gold can move all the way back down to 1062.20 and still be just fine. And that's what, that's a fairly decent spread. You're looking at about a $75 spread out here. Not saying that's what's going to happen today, but gold ought to, as long as gold can hold support of 1104, I would anticipate a higher price out here. That is the current message of gold, and we'll get a whole lot more information, I'm sure, within the next couple of trading hours out here. We should, but only time will tell. So nothing else that I can think of that you and I can take a look at in summary. I will say you've got the currency pair, the Euro-Japanese yen, says that the market has no headwind for moving higher. You've got the VIX index, which is kind of a little bit iffy here, but not too bad. Says that if you see that close below 2082 as a number, that's a 50-day exponential moving average. If you're a short-term trader, absolutely, positively, unequivocally, do not be short the market, because this market wants to move higher. If you are short the market, make sure you have stops in place. If, in fact, the VIX does not get below 2082 and it continues to trade higher, and if you are long the market, make sure you have stops in place. The key thing, make sure you have stops in place out there. But at least we've got, we know what to be paying attention to. If that VIX index gets below that 50-day moving average, I can assure you that you're going to see these advanced decline oscillators continue to be in bullish territory. That says the bulls have the ball. Yesterday it was 1st and 10. So far they've moved the ball just a couple of yards out here, but they're in a timeout waiting for a decision by the Federal Reserve. You're going to get that with David White. Stay tuned for that show, and I'll see you on terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.